first one I'm bringing up is one that I brought up twice before. It's UEC. I brought this up a couple weeks ago. I really love the uranium story. And what I love about uranium as a whole, and I've been pushing uranium for months and months and months now. Now, the reason I'm bringing up UEC again, aside from a potential breakout scenario, is that last week, BMO Capital Markets and Morgan Stanley say that they expect a rally in the spot price of uranium over the next couple years. This is on the heels of a lot of other banks that have had bullish outlooks for the uranium sector. I haven't seen this much chatter on uranium in 10 years. Uranium's been in this beaten down market for a decade. And there is a lot, and there is continues to be, whether it's Big Short, Michael Burry, or what seems to be every bank on board now. And the spot price of uranium moved above $30 per pound for the first time this year last week. So there just was a string of positive news stories surrounding uranium last week. CCJ is the biggest mining company, a company that we have on our dirty, sexy money list, setting up with its own nice little potential breakout. And the weekly chart's so much prettier, right?
The weekly charts on all these volatility type plays are much easier to read.
They are much easier to read. They are much easier to read. And that's the thing you have to understand about penny stocks and uranium specifically. Some of your classic momentum-based patterns, they're different. There's just a lot of like day-to-day volatility that can create. But when you smooth that out on a weekly chart, it's not so shabby, right? It's a much smoother read of the price action this year. And so UEC, which is, one of these stocks, and Tim brought up UU, triple, quadruple U's. I would have brought up that one today for diversity, except it's no longer under $5. So it doesn't qualify for our segment. But I like exposure to uranium, and for individuals looking in the penny stock land, UEC, give me a technical read on UEC, Matt.
UEC,
because I love it from a thematic standpoint. I love the volatility. I love the option premiums. It's treated me well. Give me a technical read on UEC.
All right. The question I have for you to start this off is: do you care at 367? Like,
I don't care at any
point. If you care at 367, then everything stops, because that's a resistance level that we may have to be concerned about.
Do you wick or not to wick?
The only way to know that, to wick or not to wick, is to go look at the data, and that I don't care about very much. Slightly, Mark, but not very much. Now, looking at it from a pure technical environment, it's a little difficult because we're talking about a penny stock, we're talking about uranium, and we're talking about an underbelly that can fly, right? Now, when you're looking at this here, I'm looking at this as a bullish uptrend that was a consolidation pattern here, okay? So my consolidation pattern is right there. I'm deleting. I don't even see that on my chart. You see this, Mark? You see this? Covered up. Put your hand on it. Like, literally, I'm not kidding. Put your hand on it. Make sure you can't see it. Now look at it. And if you now look at it, you see this as a breakout on Friday with the continuation here today, and you look at it from an intraday perspective, and you drop this down into a 5-minute chart, you drop it down into a 15-minute chart, you drop it down into a 30-minute chart, you drop it down into an hourly chart, whatever you like, and what you're going to see is you got a 364 breakout that is going to be your channel there on momentum. So if you're looking at this candle here, then there isn't a technical trade here. You're too tight against that. Now, and I'm not kidding, guys. I took my hand and I covered that wick up, and I saw a very clean trigger here, continuation here, followed by continuation there, which means I don't care about that. I like this as pure momentum above the high, discounting 367 above 364, pure momentum with a stop loss underneath 34.
There's huge momentum there. I got no problem. I always have a hard time on these uranium plays because I'm just like, all right, why not just play CCJ? So that's part of where my
It's not
head
the
is. But
game.
that's not the game. That's not the premise. I do get it. I love the momentum. And Mark, you know what's interesting
Well,
about this one? Just real one quick thought. Mark hates it when prices go up. But when he says I don't care on uranium, he believes in the theme enough to play the momentum on it. That's telling to me, knowing my brother well enough as well as I do. Mark, you firmly believe in this uranium theme this year. Is that right?
Well, not just this year. Uranium has had a supportive backdrop for about 6 months now, and that is without a commitment from a major government to push the nuclear theme. I believe in the Michael Burry argument that listen, as it is a matter of time, there's nothing cleaner than nuclear power. It's an eventual. You get far enough away from the Japanese nuclear disaster. I buy that. I buy the sentiment. Uranium has felt
are
for
you talking about
months.
the Fukushima reactor from 2011? 10
Yeah, I
years
mean,
ago?
and uranium stocks. I mean, if you go to CCJ on a monthly 15-year chart, I mean, it is just barely breaking out of the price action from where it was. I mean, so you're dealing basically
What,
back in
was it
December.
Fukushima?
I'm trying to remember the name of the reactor. That
I
sounds
think it
right.
was
But
Fukushima. But I
I
mean,
could have
you're
swore it was
basically in
Fukushima.
December and January are dealing with a 10-year breakout of price
Fukushima.
action.
Yeah.
And so when you're dealing with a compressed area of time where something's been beat up that long, you know, just because I'm a few months into the trend, I mean, there's a lot more room to go.
By the way, that's
Potentially.
right there.
Mm-hmm.
So I think there is. There's room to run, and that's why, like in uranium, I love the pullbacks in uranium when they occur. Very happy to add more if it drops lower. But there's also this worry I have that it's just going to get away and it's just going to take off. And it's already had a really good year,
I
right?
spent I spent a lot of time on this chart on CCJ specifically for Dirty Sexy Money. And I'm now just 3 months later being reminded of why I added CCJ. And it was the beauty of this reversal long term.
That is a multi-year reversal, and the price action has been rewarding. It's something I brought up CCJ probably 12, 15 times on weekend shows in the last 4 or 5 months. But
I'm glad we got to talk about CCJ and Dirty Sexy Money today. It cleaned it up a lot.
Mm-hmm.
So, and once again, if you try to do this with tight stops, basically swing trade, I don't know how much luck you're going to have. You're going to catch some momentum shifts and this and that, but I love it position style. I love it cash flow
Okay,
style.
well, if you love a position style, my stop was based on swing trading intraday data.
Mm-hmm.
If you love this position style, honestly, I think you got to get a stop loss at least underneath 3.
Mm-hmm.
Yeah,
To break
minimum
out.
3. The breakout. Again, I'm discounting this. It's got to be a minimum of under 3. If you're a little bit more conservative, under 2.5. But I honestly though, if you like that position style, you should have been looking at this dip. If you like,
Well, we brought it up 2 weeks ago.
No,
on
I
that,
know
yeah.
you. I know you were. But if you are adding position, you're adding based on you bought here, and now you're simply adding. You're not initiating a position trade 30% above the price. Like that's not going to happen. Plus, I don't think the analysis is there. But again, if you are looking at a position, adding 2, that's a different conversation than the one I was having earlier.
Mm-hmm.
All right. So the other ones, I have a trifecta of gold mining stocks.
Trifecta?
A trifecta of gold mining stocks for you to choose your favorite cheap gold miner. Now, I really, really am excited about adding gold from a cash flow perspective. I mean, you guys talked me into selling a naked put I wasn't planning on doing earlier today. I just like the stability in gold. And when I see stability, I immediately think cash flow with directional opportunity because I mean, I'm just really old fashioned. If bears can't break support, price can do two things. If support don't break, it either trades sideways or goes up. So my three trifecta are HMY, and I want you to pick the favorite one.
Okay.
HMY, AUY, and IAG.
All right, so you got AUY. Give me them again, Mark. You got Umana.
AUY, HMY, and IAG.
IAG was the last one. Okay. And Chucky, what's your time frame? What's
Forever.
I just want to
Like,
make
gold.
you're looking to add
When I
portfolio
add to gold positions, I only trim gold positions in extreme profit situations.
So you're looking, you have in your portfolio allocated a certain percent to gold, and right now you're underneath that percent.
I'm low.
And you're looking for something. It can be gold, it could be GDX, it could be any miner, but since we're playing the game, we're looking at cheap miner here.
Yes.
Right. Okay. All right. So Tim, you want to go?
Yeah, I'll go. I would throw IAG out first. Okay. And I'll tell you why. Underperformance against the other two relative over the last couple months. It's also stuck in a long-term range relative, especially I'm looking at like the weekly, monthly type charts. And if you look at that, it's actually below. I really like AUY and HMY's longer-term reversals better. If you flash over to HMY next, compare it against this IAG on the long-term chart real quick. You'll notice it's got better relative strength against it, also threatening that reversal characteristic coming back up. And AUY has a very similar type of feel to it as HMY in that regard, but actually a little bit underperforming. My choice would be HMY. Also looking at their sales year over year over the last 5 years, they've been increasing. Looks like pretty good healthy numbers actually year over year. They got a 12 PE ratio, 9 forward PE ratio. Long-term technical charts kind of grab my attention first. My pick would be HMY.
Yeah, I'm going to have to go ahead and agree with Coach Tim from on HMY. Technically, he's talking about the relative performance. Technically, that is based on fundamentals. The fundamentals are identical. HMY is the fundamental strong one here with proper valuation would be HMY. AUY is fairly decent. Umana is fairly decent. There's nothing wrong with Umana from a valuation perspective either. But IAG, kick it out the door. Don't even look at it again. It's just a minor. That's all it is.
And I had written down Matt and Tim will pick HMY.
Yes. Now the question
like the trend line break too on HMY.
Well, look at this. You got this nonsense is the V-shaped gold analysis that nobody liked. But what happens for standard trend comes down into the breakout channel, double bottoms, double tops. You get a breakout of 5. Now it's certainly a trash pick because it's 481, but the trigger for me would be above 5. Like I would not start this under 5. No, absolutely not. I would literally start it right above 5. And Mark, if you want to make it under 5, we'll make it under 5. Buy a share at 494 and then start everything else at 5. But on the reason 200-day moving average on the daily charts right there. So I like this. That's a 45-degree angle downtrend. I like this double bottom. I like this retest. I like this breakout. You still got to reclaim the 200-day moving average. That's why you got to take 5 into account. Fundamentals, HMY is honestly, I think you can make a slight argument, but not a good one on AUY fundamentally. HMY head and shoulders above the rest.
Yeah,